Good product gets you to buy once. Great product gets you to repurchase. And excellent product can build lifetime loyalty. But also the product strategy in terms of core hero SKUs versus newness and how well their core hero products really drive the business. Then on the people side, we're investing in people as much as we're investing in products. Oftentimes when we're investing, there's not much of a team. So you're really just banking on the founder, maybe the core few people that they have, but can you see that founder being able to build?
Welcome to Maker's Mindset. I'm your host, Nancy Twine. And in this episode, I'm in conversation with Cristina Nuñez, co-founder and general partner of True Beauty Ventures, a growth fund that invests in emerging beauty and wellness brands like K18, Crown Affair, and Moon Juice. And with over 18 years of experience in CPG investing and operations, Cristina has been recognized as Vogue Business 100 Innovators and one of WWD's most inspirational women leaders. And before co-founding True Beauty Ventures in 2020, Cristina held significant roles at leading companies including Equinox, El Catterton, and Clark's Botanicals. Let's go ahead and jump in. Well, welcome, Cristina. I'm so excited to have you here today. And it's so crazy that we're both sitting here together because I feel like we probably met 7-8 years ago when you were at Tengram working with Rich. And it's so incredible to see how your career has evolved. And that's where I want to start. I want to start at the beginning because you actually started your career at UBS Investment Bank. And then you transitioned into private equity, working at firms like El Catterton and then Tengram, where I met you. And I really want to know, what was that defining moment that really made you say, I want to transition from working at a fund to actually running my own fund?
Well, first of all, thank you so much for having me. This is truly an honor. And it's amazing to see what you have been able to build and how your career catapulted over that period of time and what you're doing now. It's amazing. So thank you.
Thank you.
I really appreciate it. It's a great question. I wish I could say I had this aha moment, defining moment. But for me, it was a series of pivotal turning points really in my life. And the first one happened, as you mentioned, I started off in a very traditional finance career path at UBS and then El Catterton and Tengram focused on consumer. But I always felt there was something missing. I felt that while I built this incredible, strong foundation from those roles, I was missing what it was like to be on the other side of the table and what it was like to actually not just manage businesses from an investor seat, but actually do the thing, which is build a brand and run it. And so that turning point kind of happened where I decided I was going to change career paths and jump over to the beauty world. And I seized an opportunity because Laura Geller Beauty was one of Tengram's portfolio companies. So I jumped over there. And I'm an avid, lover of all things beauty. I have been since I was a little girl. So I loved every bit of it. I loved learning about the industry. I loved understanding what it takes to actually, build a team and manage a team and get products from concept to market. And then I transitioned from my Laura Geller role to the GM of Clark's Botanicals. And in that seat, I not only, was at the helm of a company leading, a small business, but I was also dealing with, many of the same challenges that small business owners, that small, beauty brand founders deal with. So I gained so much empathy for what it's like to be in that seat. My second turning point was a little bit more unexpected. In 2019, my dad was diagnosed with pancreatic cancer. And at the time, my husband, who was my boyfriend at the time, we both left our jobs. We left New York, where we had lived for 12 years. And we came back to Miami. I grew up in Miami to help my family and help my dad deal with that diagnosis. He ended up fighting for 5 years very bravely, and we lost him this past May. But that period of my life taught me that, as much as you think you're crafting a career path, so many things can happen to disrupt it. And it's not all about personal advancement and professional advancement. It was a pause for me. And I think that pause allowed the next opportunity to come, which was a phone call I received from my co-founder, Rich Gersten, who I know you know very well, who called me in February of 2020. And he said he was ready to make the jump, he had an aha moment and he realized that that defining moment, he realized, you know what, I want to start my own thing and I want to capitalize on this experience that he had investing in beauty for so many years. And he wanted to create a fund dedicated exclusively to that. So when he called me, at that point in my life and said, I'm doing this, I'd love for you to do it with me, everything just clicked. I was like, you know what? These kind of disjointed career, professional experiences that I've had, somewhat unconventional, they all made sense. I'm like, they're perfectly fit for me to launch and build True Beauty Ventures. Those combined experiences of a consumer finance and investing with beauty operating experience. And for the first time, I'm like, I'm exactly where I need to be.
Wow. I mean, it's so amazing. And we have very similar stories because my impetus for starting Briogeo was after I lost my mom and I had this pause. And, I tell people so often, I would have never imagined myself in the beauty industry. I didn't even know you could have a career in the beauty industry, right? And, I feel like there's so many stories about how people turn tragedy into a triumph and that, it opened some sort of door for them to explore something that maybe they would have not otherwise.
100%. And I'm sure you're very much like me, type A. You like to control all the inputs and eliminate as many variables as possible. And life just doesn't work out that way, right. And so it was an amazing, journey for me, lots of twists and turns, but ultimately landed me here.
Amazing.
I'm very grateful for all of it.
It's awesome. And I know in the past you've stated, and it's a very profound quote, if you're going to make actual change, it's not just about investing in female founders, but it's also having more diverse female funders at the table. And as one of the few women leading their own investment fund, I'd love to know, what were some of those biggest challenges that you faced in the early days? And were there ever any moments where you doubted yourself?
Well, we launched True Beauty in the middle of a global pandemic in 2020. So fear and doubt were all around us, and it was a very uncertain time. And of course, I had my own self-doubt about what I was about to embark on. But I've been the kind of person who I just never let obstacles stand in my way. I have this just innate ability to keep pushing forward. And in the case of starting True Beauty, I think it might have been a combination of that fierce determination and some naivete about what the heck I was about to do, starting a fund. I really didn't know anything about that. But, we did it. We decided we were going to push forward despite all the uncertainty of COVID and launch the fund. And I think the doubt really came from external people, actually. And that doubt fueled me so much. And a lot of that doubt came from going into investor meetings, sitting with prospective LPs, limited partners, the people that invest in your fund, and pitching a fund dedicated to a predominantly female industry, investing in predominantly female founders, and pitching that to a room or a Zoom room of predominantly older white men. And in so many cases, they didn't understand why beauty. They didn't understand why it was so attractive. In many cases, they couldn't relate to the product either. They would say things like, oh, well, my wife wears makeup. I'll ask her, or my daughter, or they just thought that the category was too niche because they didn't understand the power of the industry. And so all of that, those doubts, those questions just fueled me to be better, be more prepared, and do my best to try to convince them. On the flip side, conversations with women were so different. Women prospective LPs, they got what we were doing. It may not have convinced them fully to invest because it couldn't, might not be a fit for what they're doing, but they understood why we existed. And when I went through that experience, it made me realize female founders deal with the same thing. They also sit in a room pitching to predominantly male investors, especially in VC, and they run into the exact same problems, right? So it made me realize how important it is to have female funders and female founders, right? Having us present on both sides of the table and have that diversity of experience and thought. And it just kind of fueled me even more to do what we were doing. And I think what I realized is self-doubt isn't a weakness at the end of the day. It's not. It can be a major catalyst for more thorough preparation and a stronger conviction in your vision. And use that self-doubt and use the doubt you get from other people. Fuel it.
I love that. And I've heard that so many times. And I love the idea of being able to take something negative and letting that be the fuel that creates something really incredible, which is exactly what you've done. And
never stop trying. You know, you may not always be successful, but don't stop trying to do it because you just never know.
Absolutely. And so our audience of listeners at Maker's Mindset, it's really a broad spectrum, entrepreneurs, aspiring, curious. And I want to just kind of simplify things to make sure that everyone really sort of understands what is it that you do. So can you talk about what venture capital is and how it operates at a high level?
Definitely. I'll talk a little bit about what traditional venture capital is and maybe why we're different. But if you think about venture capital, think of it as you're funding promising entrepreneurs that may have an idea and they need capital, they need investment to be able to launch that idea, create products, scale, and grow their businesses. And oftentimes in venture capital, you are investing very early, sometimes pre-launch, when there really is just an idea and there's nothing that's been commercialized yet. So what does that mean? Those investors are taking on significant risk. They may believe in the potential of the business, but there are significant risks. So therefore, they're expecting significant returns from taking that risk. With True Beauty, we're trying to carve out a little bit of a niche in a couple of ways. One, we're considered more an emerging growth fund. So we are investing early, but we're investing in brands that have already been commercialized. There's proven product market fit. If you think about, brands we've invested in our portfolio, like K18 or Crown Affair, Vacation, they have proven traction. They have some history. It's still quite early. And we're providing the fuel, the capital, the strategic support and guidance to help them accelerate that growth. And we're also a little bit different in that we're very sector focused, really dialed into beauty and wellness so we can help guide brands through the nuances of what it means to scale a brand in beauty versus, obviously in venture capital and private equity, there are generalists, there are people focused on, a bunch of different categories. We're really dialed into one. So we're kind of viewing ourselves a little bit more as a strategic partner than an investor. I actually one time had a founder tell me we had just invested in their brand and we had our kickoff meeting. And she said, I've had investors and I've had partners. I've never had investors who are partners. And that's what we're really trying to do. We're really trying to move away from just being, especially just being a VC investor, which can have its negative connotations, but also just being an investor, like view us as something entirely different as a thought partner, as someone along on this growth journey with you.
Yeah, I think that's really important, especially for brands that are just getting off the ground. Oftentimes a check isn't just enough, right? They need access to advisors who see a lot of things, right? That's the other beauty of it, is that you get to see things across your portfolio to help connect the dots. And I would also say too, I feel like, with the rise of so many VCs coming into the market, you have to figure out how to differentiate yourself, and cutting a check, it's not enough anymore. So I think that's incredible.
Yeah, I think founders are being a lot more discerning too. And I love when I see a founder evaluating me too. I mean, it's a two-way street, right? It's not just the investor evaluating the opportunity. You should be taking a look at what we do, how we, what our portfolio looks like, what our founders have to say about us as well. Do we add the value that we say that we do? And you should do that. I mean, at the end of the day, I know people use this analogy all the time, but it is a marriage, right? And it's very difficult to get out of. You can probably get out of a marriage easier than an investment partnership. But yeah, I do think it's an opportunity for both sides to do their due diligence.
So, I talk to a lot of founders, as you do, and I feel like sometimes there's this assumption that if you have a great brand and a great product, that investment will just naturally follow. But from your perspective, what does it really mean to be investment ready?
It's a great question. And I'll try to simplify it a bit because I do think great product and having a great brand are very critical, but there's so much more that we look at. And I talk about it in the 5 Ps. Okay. So I'll go through them very fast, but You have positioning, you have product, people, performance, and partnership. Some of these are a little bit self-explanatory. On the positioning, we're looking for brands that are differentiated. Their positioning is unique. It's very easily understood and clear. And in a crowded market, stands out, right? Product excellence is a non-negotiable. Good product gets you to buy once. Great product gets you to repurchase. And excellent product can build lifetime loyalty. And it's such a critical piece. So we spend a lot of time understanding the product, but also the product strategy in terms of core hero SKUs versus newness and how well their core hero products really drive the business versus falling into the trap of nonstop launching of newness, which can happen in our industry. Then on the people side, we're investing in people as much as we're investing in products. The team is everything. Execution is everything. So spending time with the founders, understanding, do they have self-awareness to know their strengths and their weaknesses? And they're, do you have an ability to augment those weaknesses with the right team members and to be able to appropriately, build and manage a team? Oftentimes when we're investing, there's not much of a team. So you're really just banking on the founder, maybe the core, a few people that they have. But, can you see that founder being able to build, a successful team that, executes? On the performance piece as well, it's looking at whatever history the company has. If you're investing early, there's not a lot, but just understanding the metrics around, the unit economics and retention and all of those good, analytics that can confirm whether there is product market fit and whether there is momentum building in the business. And then when you think about profitability, because I get asked this all the time, well, do you need to be profitable at day one? And the answer is no, we don't expect that. But have you built the right business model to be able to scale profitably, right? Do you have the right gross margin profile? Do you have efficient marketing? Will you be able to, operate and create sales leverage on your fixed costs as you scale? Is there a clear and reasonable path to profitability is what we're looking for. And then the last one is partnership. And it can be really critical because I've had some conversations sometimes with founders where they realize halfway through the courtship, I don't know if I want a partner. I don't know if I'm ready to actually make that type of commitment. And maybe I'm not ready to have open, transparent dialogue with a founder and report to them on a monthly basis. Or, I just don't want anyone in the kitchen with me right now. Like I want to continue to build this. And that's an important thing for a founder to recognize. And it's an important thing for us as an investor to know going into it. So the 5 Ps typically guide us on is this brand actually ready for investment across a multitude of areas?
Yeah. And actually, I'm hopping around here because you brought up something that I think is so important, which is, once you wire the money through, that's not it. It's actually the start of something, longer and even, closer connectivity. And, I think sometimes founders can feel a little intimidated by investors because they don't want to disappoint you. And maybe, there's a quarter where, sales are soft and, instead of being transparent about it, maybe they're,
dancing around it.
Exactly. Sound better than it is. So what are some of the biggest misconceptions that founders have with working with investors? And what do you think really makes for a strong collaborative partnership?
Such a good question. I would say a couple of misconceptions that I've come across. One is that you have to come prepared with solutions and not just the problems. I always tell every founder in our portfolio, come to me with the bad news first. The only problem I can't help you solve is the one that I don't know about. And there's this saying that goes that bad news travels by phone and good news travels by email. And pick up the phone and just call at any point in time and let's just talk through it. Because here's what happens. If you try to come prepared with a buttoned up solution, you may be wasting precious time because there's a high chance that we've seen the challenge you're going through across our portfolio or in our past lives. So we can help you address it faster than you kind of waiting and coming to us with potential solutions, which may or may not be right. So just feel comfortable enough to come with the problems first. I think another misconception is that failure isn't an option. And I think, we talk about things a lot at True Beauty as far as wins and learns. We don't talk about losses, because even when you fail, even when you lose, you learn. So in those moments, fail fast and learn faster and bring those learnings to the table. But if you're always afraid to fail, you may never push yourself to take the risks that you need to achieve that breakout growth, right? So feel comfortable that it's okay to make mistakes and it's okay to fail, because you will hopefully learn from those things and you'll gain very valuable lessons and insights. And then I think another one is lack of focus. And again, I have so much empathy for all of the things that founders are dealing with on a daily basis, big strategic questions and everyday fires that they're trying to put out. The lack of focus can really be challenging because you need that ability to say no. Being strategic is saying no. And sometimes the things that you say no to that are not core to your values or your strategy are more telling than the things that you say yes to, and are more important in some cases, right? So knowing when to say no, knowing when to say no, not now. It could just mean we'll do something at a later point in time, and being able to prioritize the things that'll have the highest impact and the lowest effort. You should do those all day long versus other things that can be distracting in your business that aren't going to actually move the needle for you.
Completely.
So that focus is so critical.
Such good perspective. And I feel like, a lot of entrepreneurs, they're creatives and they're just constantly coming up with ideas. And, it can be so exciting to want to, say yes to a big opportunity. But that focus piece is something that even I personally had to learn the hard way, but it is so critical.
I'm doing it myself in my business. We were talking earlier about all the things we're doing at True Beauty, and sometimes you have to just prioritize and say no to opportunities. So 2025 for me is going to be a year of saying no. I'm going to practice what I preach. I love that. It's hard. It's really hard.
How do founders find someone like you? Because I feel like when I talk to a lot of founders, one of the number one topics that everyone wants to talk about is how am I going to fundraise for my company, and how am I going to meet a True Beauty or, another fund? And, what is networking do for that progression? And are there other ways that you would just really advise founders to create a good impression and connection with a fund?
It could be daunting for sure, but I don't think it has to be. I think the founders that do it well don't view it, they have a more long-term lens of relationship building, and they're less transactional. And by that, I mean, we have to fundraise, so let's go out there and meet everyone. And it feels transactional versus just thinking of it as just relationship building over time that will benefit you when you're fundraising. And the beauty industry is great because it's so large, but it's also so small and very interconnected. So I think there's a huge opportunity to utilize the beauty network, your founder network as well. We call it, the flywheel of founder friends. Most people are very collaborative and they want to help. So utilizing your existing networks is one great way to do it. If you have founders who already have investors on their cap tables, you can easily get a thumbs up or a thumbs down, or utilize the experiences that they had and the groups of people they talked to on their journey. So you're not recreating the wheel. That's one way to do it. I do think it's a lot more challenging if you don't have a network and you have to be a little bit scrappier and kind of just push your way in. But that's okay. Go to conferences, go to events, approach investors. But I would just say do it in a way that's very thoughtful and where you come across as prepared. And what do I mean by that? The investor you're approaching, whether it's in person or a cold inbound over email, but you know what they invest in. You know their portfolio. You know the size and the stage of their investments. And does that fit with you as a brand and the category that you're in or the size of the business that you currently have? I can't tell you how many emails I get from people with a food business. And I'm like, that's not really what we do, or something in apparel. So just know kind of the investors that you're reaching out to and what they focus on. And I would say the best ways to stay in front of investors is keep them updated on your business. I love getting updates from, it could be a mass investor update email, but I'm copied even though I'm not an investor, and I'm being kind of kept abreast of what's going on in the business, exciting new launches, awards they've gotten, whatever, retail partners they've secured. I think it's really important to keep people up to date. And that's a great way to get them to re-engage, especially if a relationship has gone, quiet for a little bit. So there's a multitude of ways. I do think I'm most impressed by founders who know that they have one shot to get in front of you and are just so darn prepared that they knock your socks off. And I have my team makes fun of me because I have a lot of quotes, but, if you aren't prepared, it shows. And failing to prepare is preparing to fail. And in everything that you do, that preparation is so key. So it gets me to want to talk to a founder and to engage with them when I know they've done their homework.
Absolutely. That is such good advice. And so, okay, a founder's networked, they've made it into the True Beauty ecosystem. You're talking deal terms. How do you think about valuing a company that maybe doesn't have a ton of historical financial data? What is that process like?
Yeah. So investing in early stage business, this is where the art meets the science. It is very difficult to apply a consistent framework to valuation when it comes to early stage businesses because of exactly what you said. There's not a lot of history, not a lot to sink your teeth into from a diligence perspective. And oftentimes these businesses, their past performance is not, nor should it be, indicative of future results because they're very early, right? When we invest, we're investing at what we call a point of breakout growth. So that business we invest in is going to significantly transform and is going to look nothing like what we invested in. So then how do you value that future growth that is very unproven and risky, although you want to give the founder credit for that future growth? And you want to also look back on any past information, whether it's financials or some of those data analytics on DTC that can show that there's traction, there's momentum, most of the growth is organic, like all the signs of having a healthy business and strong fundamentals. And so you want to land somewhere where you're giving them credit for that future growth, but you're adjusting it for the risk that you're also taking as an investor. So all this to say is with each and every one, it can be very unique. And there shouldn't be a standard that's applied. What I will say is founders can get very hung up on valuation. And I know you probably have many strong views on this too, but it shouldn't be everything. First of all, it shouldn't be what you gauge, picking your partner on those terms. It should be so much beyond that. While it is an important piece, it is not everything. And sometimes you can set yourself up for failure when you set the bar too high. It's too much pressure from your investor to unnaturally grow to meet that level of, scale, pressure from yourself. So it's not something you want to put yourself, a position you want to put yourself in. So I tell founders, it's one piece of a much larger puzzle and to not stress about it and to pick your partner for, reasons other than valuation. And I'm sure you probably have felt the same in the past.
I think it's about, is this a fair valuation? Because I agree. I mean, I feel like one, you don't want a super low valuation. You don't want to feel undervalued. So I think, figuring out what's fair, but going after such an aggressive valuation, especially early on, like you said, it really sets the bar for performance. And I think you could just add a lot of unnecessary pressure and also cause you to maybe make decisions that you wouldn't have made that aren't necessarily aligned with the vision of the brand, but just because you're trying to hit a number, I think is also another consideration. And it goes back to that topic of like, how do I create a system, an environment by which I can be focused, that I'm not distracted or chasing something that I shouldn't be chasing.
You chase a natural growth at all costs. You open distribution you shouldn't be opening. You launch too many products. Right. I mean, there's so many bad decisions that can come from that. So yeah, I also tell founders there's a lot of, comp data out there. Sure, you could look at what brands like your brand, sold for and all of that. But you always have to remember that those businesses are large and they're profitable.
Yeah.
And you are at a very different scale and profitability profile. So don't look at those multiples and say they should apply to me either.
Right.
But it's always a discussion, and each situation is very unique.
For sure.
So it makes our job exciting.
Yes.
And difficult.
You've worked so closely with so many different founders, and you've been able to see firsthand what drives success, but also what can hold a company back. What are some of those common patterns or mistakes that you've seen that prevent founders from getting ahead? And are there any recurring themes that really separate those from, who break through versus don't?
Yeah, I think some common mistakes we'll see tied to kind of a natural growth or distribution mistakes. We talk a lot about focusing on depth of distribution versus breadth. We talk a lot about having more narrow but productive distribution. And so you'll see sometimes a tiny brand that has 1,000 points of distribution and they're doing less than a couple million in revenue, right? You're not productive in either in either retailer that you're in. You're not meaningful to them either. So growing too quickly, expanding too quickly, the same can apply to product assortment. Staying, tight and productive is so much more valuable. I think about one of our investments, K18. I mean, they got to 100 million in revenue in 3 years on less than a handful of products, right? I mean, you can build a lot of scale and still have a very tight assortment of core hero products. So that's definitely one. I think other, mistakes I've seen, we talked a lot about team and execution, but, not hiring the right people and not following the mantra of fire fast and hire slow. That can have tremendous effects because, you may have the best brand and the best product, but if you don't have the right people to execute, it could really break you. So those are some other, mistakes we've seen that have held some seemingly great brands back. Obviously not picking the right investment partner, bad advice and not surrounding yourself with, good people that have your best interests in mind. I would say those would be some of the bigger ones. The one that is really very meaningful to me, because if I were starting a brand, which by the way, I don't know if I ever would because I know how hard it is, but I would try my best to start with the end in mind as much as you can. And what do I mean by that? Is you could be launching a product because of a passion that you have, because of a great idea and innovation, whatnot. And that's all wonderful. But just make sure whatever that you're building is commercially viable, that you think about building a business as well as building a brand. Because if you don't have a sustainable business, you're not going to have a long lasting brand. Right. So what do I mean by that, right? Like what are all the elements to at least try to build commercially viable business? One of the easiest ones and where I've seen the most mistakes is around your product margins, because you have, again, a great idea, a really cool delivery system, awesome packaging, really, complex formulas, and you launch that, but you haven't set a cost target for what that product should cost. And then you think you want to sell it at this price, but based on your COGS, you actually will lose a ton of money if you don't adjust that. But if you adjust it higher, it's not going to sell. So now you're kind of stuck in this trap of creating really good product, but at a low margin. And that is a major inhibitor to ultimately creating a profitable business. And so I see it a lot there. And that's an area that's kind of really hard to fix. Takes a couple years. You got to go out and find new manufacturers. You got to maybe re-engineer the product itself, take away ingredients. It's actually a lot of work and something that as an early stage fund, we may just walk away from. Like we may not choose to invest in that business because of its gross margin profile and how difficult it is to fix that type of mistake. So that's one where, I really encourage beauty founders in particular, take advantage of the great margins in our industry and really think about the cost targets when you're launching product.
Definitely. I always tell people one of the benefits of working in finance, I was in a commodities business. And so everything was about margins. It's like, what were you going to make on crude oil or natural gas? And so I always had that mentality of being mindful of margin. And so when I started Briogeo, like really understanding the cost structure relative to how I was pricing the products was really critical. And I feel like just that sort of discipline from the beginning got us so far in so many different ways.
And, a lot of founders are they're creative, marketing focused. They bring that genius to the table. And oftentimes they don't have that background, right? They don't have the business acumen. They may not have people around them to advise them, right? It's their first time doing this. So yeah, the fact that you had that experience was so beneficial for you. And I think the earlier that founders can surround themselves with people like that, especially if they don't have that skill set, the better. We're seeing founders hire even like presidents earlier and earlier than they would normally because they recognize, that, I don't have the commercial lens, right? So I need to bring a counterpart earlier that can really see things that way and help me ensure that my business is on the right track.
We were talking about choosing the right distribution. And for any CPG brand founder, it is so hard to ignore Amazon. And I want to talk to you just about your point of view on Amazon. Can it be brand dilutive? Do you have to meet the customer where they're at? How do you think about Amazon when you are, positioning your business as premium or prestige? Would love your take on Amazon because it's such a beast.
This is a hot topic for sure. And a couple of years ago, my answer would have been different. Amazon today is the largest US beauty retailer. And what it has been able to do over the last few years is incredible. In the past, I would have said that Amazon is a great place to capitalize on your existing brand awareness, but not to build it. And while I still think part of that is true, I do think that the consumer is so overwhelmingly there because they're shopping across so many different categories. And it's such a convenient to purchase channel that you can actually be there as a small brand and capitalize on just the sheer volume and the fact that people are shopping there sometimes daily for products, right? And you can capture some growth there, but it's still not a place where I think you can build a brand fully, right? It is another distribution channel. And if I'm a small brand, I would still continue to prioritize Sephora and Ulta if you can get in there. But I wouldn't say if you're a small brand who's not at Sephora or Ulta yet, I wouldn't say, oh no, don't go on Amazon. It is going to dilute your brand. In fact, you may already be there with resellers and you don't even know it, right? So I would encourage them. It takes resources and you still have to, be able to, build that channel appropriately. But I would encourage them to think of it a little bit more like they're an extension of their DTC and think of them together. And some of the marketing that you're already doing and money you're already spending to build your DTC can also benefit your Amazon business. And so small brands, I would encourage them to explore Amazon. If you're already at Sephora or Ulta and you have an exclusive, Amazon's a 4-letter word, especially at Sephora. We've seen that with our portfolio. And it's a lot harder, I think, to be able to open Amazon when you have your exclusivity at those retailers. So even those retailers are noticing the power of Amazon. So I would say yes. I wouldn't have encouraged small brands to do it in the past, but I think they're changing the game.
Yeah, and I just feel like we're migrating more into this environment of like meeting your customer where they're at. I mean, when you look at the Sephora Kohl's partnership, Ulta Target, I mean, some of those lines even between, mass and prestige get blurred, and there's this new category of masstige and but I think it's all fundamentally sort of built on this concept of meeting the customer where they're at.
And you think about brands that experience tremendous virality on social, a lot of it converts on Amazon. And people are going and checking out the brand on Amazon. Do they have a lot of reviews? Like, what are people saying about them,
exactly.
right? And if they can get that product in 2 days and free shipping, why wouldn't you buy it on Amazon? Right. It makes total sense, right? So I think it's a game changer, but I do think there's a place for beauty specialty retail for sure. That to me, when I think about creating brand equity and enterprise value. It's, proving concept in those retailers, right? So that should be the priority if you can get there. And that's on the prestige side. Of course, if you're a mass brand, going into Target and some of the other mass retailers could be your strategy. But finding that core anchor retail partner is so critical still to this day. And I think brands that are solely built on Amazon might not be as valuable.
I agree with you. I want to switch gears a little bit, and I want to talk a little bit about the personal side of Cristina, because I know that running a VC, it requires, so much running around, constant, being on, meeting people. It requires a lot of energy. So I'm curious to know, what non-negotiables have you put in place that helped you to maintain that energy and just your well-being throughout it all?
This is such a good question. One I really adhere to, one I'm working on. But yeah, I mean, being an entrepreneur is a 24/7 job. Even when you're off, you're not ever fully turned off, right? Even when you're not working, you're still, thinking about work. And so, first of all, I don't adhere to this work-life balance thing. It doesn't exist. There's absolutely no way to make them both equal. What you can do is, in the moments when you're not working, be as present as possible. Of course, put your phone down, focus on, your husband, your family, your friends, your self-care, whatever it is, and try to have that, presence. That's one good way to do it. But when I think about some of the non-negotiables for me, and they could change as my life changes, but right now I cherish my mornings. I'm an early morning riser. I get my workout in.
What time are you waking up?
Depends. Sometimes 5:20 and sometimes 6:30, but 6:30 will be the latest. I'm getting my workout in. I'm cooking my breakfast, coffee, taking my dog for a walk. And that morning alone time is just me, catching up on news, even just catching up on emails, laying out my objectives for the day. But it's just my quiet time. And I keep them very sacred. If I don't start my morning off like that, I can be very grumpy. The other non-negotiable, it's becoming a non-negotiable, but I struggle with it, is eliminating those back-to-back Zoom meeting, one after the other, where for me, it just sucks the oxygen out of the room, right? I cannot show up as my best self when I'm in those back-to-back, especially virtual. At least in person, you can kind of pick up someone else's energy, right? When you're just staring at a screen all day. And I work from home for the most part. We have an office in New York, but I spend a lot of time working from home. And it's something I need to get better at. Talk about saying no, right? Saying no to certain meetings. Do certain things have to be a meeting? Can it just be an email? And not creating that just craziness of a day where the day ends and I have nothing else left to give, right? You can't pour from an empty cup. So if I'm going to show up as my best self to my portfolio, to my team, I know I have to avoid those types of days. And I do my best, but it's tough when people need you and you've got a 30-minute window in your calendar.
Yeah.
It gets taken up.
Because you have, internal meetings, but then also too, you have to constantly be sort of nurturing this network of founders that, you meet and may become potential there's investments. And so
there's the diligence work, there's the portfolio work, there's that networking and just being everywhere present for true beauty. There's, just the brand building stuff that we do. We were talking about, we're having a brand summit for our brands and a big meeting for our LPs coming up. And we have, we participate in all these conferences and events and all of that. And there's only so many hours in the day, right? So, but I think at the end of the day, I love what I do. I do get so much energy from it. And it's just isolating those things that just take the joy away and trying to avoid them as much as you can.
Completely. I agree with you. So as you know, the fundraising landscape has been, challenging for a lot of founders, especially, over the past few years. And what would be sort of that one solid piece of advice that you would give founders right now that are trying to scale their business, but also need the capital to do so?
It's a challenging environment. Fundraising starts with FUN, but it feels more like an FU than fun right now. It's really, really tough. I would say, first of all, as a founder, don't tie your worth to fundraising and your ability to secure capital, right? There's just certain things that are out of your control right now, and the environment being challenging is one. But I do think what it means is a couple things. One, investors continue to be very discerning on the opportunities that they choose to invest in. The bar keeps getting higher for what investors are looking for, even for early stage businesses, where they're looking for the great product and people and the retail partners secured and traction. Like, they're looking for everything. And if you're a small brand, you're like, well, it's chicken and the egg. I need the capital to be able to get those things. And without them, I can't achieve it. So how am I supposed to do it? So it can be very frustrating. But investors are looking for more and more. And I think overall, the demand for capital from small brands is so much bigger than the supply of available investors that are willing to invest, in early stage businesses right now. And there's just an imbalance that exists today. So what does that mean for founders? It means it's going to take you longer to raise. So get out there sooner, start your networking, all of that. It's going to take longer, and make sure you have the runway to last through that period of time. You're going to get a ton of no's, and don't be discouraged by them. Use them as fuel, as we talked about. And I think, one option for those brands that maybe don't check all of the boxes that investors are looking for right now is, battening down the hatches and just saying, okay, right now the environment is too tough. Let me focus on my business and trying to see in a scrappy way if I can accelerate some momentum, or if I can clean up certain things and make my business more attractive, in hopes that the environment may change and investors might find it, more interesting to invest in me. But that's a luxury that I understand some founders may not have, because they just don't have the time. So my heart goes out to so many founders right now, because it is like you're pulling your hair out trying to figure out how to do this. And you still got to run your day to day while you're also fundraising. So it's very, very challenging. But I do think, I try to be very positive. I try to keep a positive outlook. I do think things are starting to get a little bit better. I think, the first half of the year has still been quiet, but we'll see what happens in the back half. As soon as hopefully some of these brands that are in market now start to trade, it gets people a little bit more energized. And it hopefully will have a trickle down effect to the earlier stage investing as well. But it's tough. It's going to take time. Be super, super prepared, buttoned up, know your numbers cold, build those networks, nurture them.
Build them early.
Focus
on your margins.
Don't forget the margins.
Yeah.
Focus on being focused.
Yes. I love that. I love that so much. So before we wrap up, we're going to pivot into 5 Fire Facts, which is a rapid fire interview series just to get, a little bit more of a candid glimpse into who you are. Are you ready?
I'm ready.
Okay. Go-to beauty or wellness product that you swear by.
I have so many, but I will say Moon Juice's magnesium. I don't know if you've ever had it. It's a cellular water. It's a powder that you put into water, and it has magnesium and like all these other amazing benefits. And for me, it just helps me get restful sleep. And I know it works because I also wear my Aura, another product I can't live without, that will tell me if I have restful sleep, and when I don't have it, it's noticeable.
Oh, that's great. I'm gonna have to check it out.
You ever heard of the Sleepy Girl mocktail?
No. All this stuff is new to me.
Yeah,
what is this?
It's made,
is it that?
Yeah, it's made with the magnesium.
Wow.
Mm-hmm. Yeah.
Okay.
Try it out.
One founder trait that instantly impresses you.
I think we hit it, because if a founder has business acumen, I think it just is so unique compared to the creative marketing genius that a lot of founders I find have, when they really have either your background too of having, finance background, or just some sort of business acumen that I know they're commercially minded.
Yeah.
It really stands out for me, and it's pretty unique.
Favorite way to unwind?
When I can, I love sauna and cold plunge.
You're brave.
It's really tough to get in, but you feel amazing after. So I try to go, if I can, once a week. If I can't do that, I'll do a at-home, like little infrared sauna blanket.
Oh, nice.
Which gets you
that. I forget what brand that is.
That one is, Oh my God, I'm blanking on the name too.
I think I know which one you're talking about.
Higher Dose.
Higher Dose, yes.
I forget. Yeah.
Favorite workout or fitness routine?
I have become a big Pilates girl. I never thought I would be, but I do Pilates multiple times a week. And then I also try to combine it with weight training and HIIT where I can. A little less HIIT these days, but definitely weights. I think as I've gotten older, you know, you turn 40, I turn 40, you're like, gosh, I can't hold on to my muscles.
I know,
it's like
strength training is like everything.
It's everything.
Yeah.
So the strength training is really important, but then I think Pilates is so great too.
Oh yeah.
So I try to go to both as much as I can.
Love Pilates. All right, something most people don't know about you.
So I think most people know that I'm Cuban American, but I don't think most people know that I'm also Chinese.
I had no idea. Oh my gosh.
Mom's grandfather, so my great-grandfather, was Cantonese and moved to Cuba and married my great-grandmother. Wow. And so on that side of the family, we were Chinese and Cuban, and on the other side, it's Cuban, you know, Spanish from Spain. But I've never been to either Cuba or China. So it's a dream of mine to go and explore my roots.
Oh, that's amazing.
One day.
I love that.
One day.
Awesome. Well, lastly, where can people learn more about True Beauty Ventures?
Definitely on social. We try to be super active on Instagram and LinkedIn. So definitely there. Also our website, we take a lot of requests and inbounds from our website, and also our newsletter. So if you go to our website, you can sign up for our newsletter, and it's got great monthly updates on the industry and what's going on in our portfolio companies, and open jobs as well at our companies, and internships and all of that. So that's really fun. And then, you know, DMs work too. Send me a DM. I try to respond as much as I can.
I love it. Well, this was so much fun. Thanks so much, Cristina.
Thank you. So good to see you.
You too. To stay connected with Cristina, the Maker's Mindset community, and me, check out all of the details in the episode description below. And check out Spotify or Apple Podcasts to hear a few bonus reflections from me on this episode. And don't forget to subscribe to this series, leave a review, and share this episode with your community. Thanks so much for tuning in.